Alison, earlier David and I were talking about the expense ratio actually moved higher, operating expenses moving higher by 21%. Is that what the market is iffy on? I just don't get a read why we're not higher in the trading, pre-market trading.
I guess I would say two things, right? So the bar was raised over the last few days, and we're all fascinated by this 38% growth in equities, which we did see at two of its peers, JP Morgan also going up 26%. So I think that there was a lift in expectations ahead of the quarter. The other thing and this kind of goes to the cost comment that you made, is that there was an accounting change this quarter. So most of the banks did adopt this standard, and so that it's not clear whether that was factored in estimates or not. So the beat may have been caused somewhat by the fact that banking fees were higher because of that standard, and it's a marginal. It's a marginal change, but it also does make the cost ratios look higher for the banks because it's a gross up in revenue and it's a gross up to expenses.
So Burns, what about your point of view? I mean, you own Goldman Sachs. Why isn't there more of a reaction? Because specifically in the FIC area, forget equities for a moment, in FIC, they really did well, unlike the other banks. And that's what you really turned to Goldman Sachs for.
Yeah, FIC is exactly what people have been looking for when they look at Goldman. This is a situation where if you look at the read-through from the other banks, I would have probably expected a day ago that at some point the FIC business should rebound for Goldman. I mean, this is something that relies on higher interest rates and higher volatility, both of which have been at historically low levels. And so based on the read-throughs from firms like JP Morgan, I figured that this is going to rebound at some point. This probably wasn't the quarter for it. And so that really certainly speaks to Goldman. Their strength is the fact that this did rebound so strongly. Now, the reason that stock hasn't reacted a little bit better, I think it could just be really just a reflection of the entire market. You've seen from equities across the board when companies have been meeting or beating expectations, the stocks have been down. And likewise, it as well could just be that this is the market's way of saying, well, this is one quarter. Show me again. Show me again. But at the same time, Goldman should be fairly well positioned when you consider that for the last several quarters, it's been clicking on 3 of the 4 businesses, with the exception of this headwind in trading. And so it's sort of like if you're watching your favorite basketball team, if they're losing by 3 points at halftime, but your best player hadn't even been in there and they're coming back in the second half, you'd probably feel pretty good about their chances.